Hello and a warm welcome to this next joint webinar by Fintelekt Advisory Services and the Asian Bankers Association on crypto's evolution, enforcement risks, asset recovery, and best practices. I'm Arpita Bedekar from Fintelekt, and I'm your host for today. Let me begin by thanking our partner, the Asian Bankers Association, for their continued support on this webinar series. We have a great turnout today. Participants from more than 45 countries across the world from various time zones are registered, and we are very grateful to everyone for logging in. Let me also introduce you to our two speakers, Vasu Muthyala, partner, and Calvin Pu, principal, both from international disputes and investigations firm Kobre Kim. Vasu and Calvin, thank you so much for joining us today. And let me tell you a little more about them. Vasu Muthyala represents Asia-based individuals and multinational companies in a broad range of cross-border government investigations and regulatory enforcement matters. As one of the only former US Department of Justice prosecutors and US Securities and Exchange Commission enforcement lawyers in Asia, Vasu regularly advises clients and industry groups on global enforcement efforts, including on anti-money laundering, corruption, sanctions, and financial fraud matters. Calvin Pu is a New York and Hong Kong dual qualified cross-border litigator based in Hong Kong. He counsels financial technology clients regarding cryptocurrency related disputes and investigations, as well as victims of fraud on international asset recovery matters. This includes a focus on digital asset tracing and recovery, as well as creative judgment enforcement strategies requiring work in courtrooms and with government authorities around the world. So clearly we are a very experienced company today. Needless to say, crypto is a very dynamic space. The Financial Action Task Force has recommended all throughout a risk-based approach to virtual assets and virtual asset service providers. But that's only possible if the risks are known to us. So it's very important that we stay updated and informed about the key developments in this industry. In today's webinar, our speakers will take us through the recent trends, regulatory updates, government priorities, and exposure areas for financial institutions and other reporting companies. They will also attempt to dispel myths around asset recovery and bring in a better understanding of the tools which are available for supporting crypto-related victims and creditors. And then they will do some future gazing and provide some tips on how to manage risks in this new frontier. So let's begin with the presentation from Vasu and Calvin, and then we will try to take in as many questions from the audience as we can. So please keep posting your questions along the way in the Q&A box, which you will find at the bottom of your Zoom screen. So with that, it's over to you, Vasu and Calvin.
Thank you, Arpita, for that very kind introduction. And thanks also to Fintelekt and the Asian Bankers Association for helping organize this session today. And thanks very much to all you participants for taking an hour out of your day to discuss with us this, what we think is a very hot topic. Let me share my screen here. So, what a big year for crypto. I'm sure even if you're not directly involved in the space, you will have seen the headlines. Every day there's news and headlines about things that are happening in the space around the world. One of the big headlines last month was that Bitcoin's price went to 67,000 US dollars per one Bitcoin. Now that's come down over the last several weeks. I think today it's at about 48,000. But even if you compare that to 1 year ago, December 2020, that's way up from the $28,000 price it was back then. There's been a recent report by a crypto analysis company called Chainalysis, which said that global cryptocurrency adoption over the last year is up 881%. And if you go back even just a little bit further to Q3 2019, it's up over 2,300%. And sometimes the headlines are, frankly, US focused. You know, you see things about Coinbase listing on NASDAQ and Bitcoin ETFs. But those of us based out here in Asia know that it's very much a thing in Asia as well. There was another public report out there that said, at least by the end of last year, 6 of the 10 largest crypto unicorns in the world were based in Asia. And of the top 20 token projects, over 40% of the market capitalization was based in Asia. And going to the, again, just a few more statistics just to underscore how much crypto has grown. Again, using the Chainalysis report, In East Asia, which this report considers China, Japan, Korea mostly, before the Chinese government's bans on certain types of crypto services, which we'll talk about a little bit later, China's share of the crypto market stood at 256 billion US dollars, and South Korea was at 150 billion US dollars. And then in the what this report calls the Southern Asia region, which includes Central Asia, South Asia, and Southeast Asian countries, it pointed out that the Indian market grew 641% between July 2020 and June 2021. And that overall in the region, there was over $572 billion worth of crypto value, making it 14% of the global transaction value in crypto. And it also highlighted that India and Vietnam are two of the most highest growing areas in terms of retail investors dipping their toes into crypto. So the point is, even if you're not currently involved in crypto, this topic matters, especially if you're in sort of the financial services space, because either your company, your counterparties, your customers, they're going to have a blockchain or cryptocurrency touch point in the coming years. And so as Arpita says, what we're trying to do in the next hour or so is to, number one, just give you a general sense of where things stand right now across several key jurisdictions. Obviously, with our limited time, it's going to just be a high-level overview. And frankly, things change so much jurisdiction to jurisdiction in this fast-evolving space that, you know, it's something you have to keep your eyes on. But we do want to underscore where things are now and show you some of the differences across jurisdictions so you can get a sense of a little bit of the exposure risk as you move in and out of different places. Second, we'll also talk a little bit about enforcement exposure risk. You know, it's one thing to have laws and policies in place, but you really need to understand what are the governments actually doing as far as enforcement. Third, you know, what happens if things go wrong? Vasu and I are both disputes lawyers, so, you know, unfortunately, the things that come to us tend to be something already has gone wrong. And so we just want to dispel some myths about things you can or cannot do when trying to recover crypto assets. And finally, we'll talk at the end a little about where things are headed and maybe some best practices for folks to follow. So Vasu and I are talking to you coming from Hong Kong, which is obviously an Asian and a global financial hub. And, you know, almost every day, Vasu and I talk with each other about the latest crypto news, just because it's clearly a big thing here in 2021. And we definitely think it's gone, quote, mainstream this year. And by that, I mean, you know, we recently attended a conference, which several years ago would have been attended mostly by the tech engineers and things like that. And this year, you know, several of the big mainstream banks had booths. It was co-hosted by the local government. So definitely a lot of attention is being played by more, you know, traditional, if you like, players in the financial institution space. But what does that mean? With all the money and attention being put onto crypto and blockchain this year, it means that regulators and policymakers are really, you know, having to be pushed or have now been incentivized to really do something about it. They've been looking at this issue for years, for sure, going back at least to the 2017 initial coin offering boom. Regulators have been studying what this is, what this technology is, what does it mean, what do we want to do about it? But frankly, a lot of jurisdictions have taken you know, a couple of years to really try and assess where their position is on this. And it's really in 2021, just because frankly, the amount of money that's pouring in, that they've really decided, okay, now we really got to move on this. But it's still not clear what that means. Arpita mentioned the Financial Action Task Force having put together some guidance just this past October on a risk-based approach. Things like implementing AML, you know, anti-money laundering, and know your client best practices to all sorts of crypto-related products, including DeFi protocols, stable coins. It actually has a bit of a carve out for NFTs, all these buzzwords from this year. But ultimately, it's up to individual governments, obviously, to put in place what laws and policies and administrative tools they think is best for their jurisdiction. And even then, it's, you know, do they want to see it as a security? Do they see it as a commodity? Is it a currency? Is it a payment system? The answer is not easy. You know, there's a tendency to want to try and shoehorn it into these types of past definitions on things that people tend to understand better just because it's been around for longer, but it always doesn't fit quite so neatly. And then governments have to decide, do we want to ban crypto? Is it a threat to our system? And maybe we prefer a central bank digital currency. Do we just want to regulate through administrative bodies and enforcement? Or maybe on the other end, do we want to become a hub, an innovation hub for this new technology, thinking it may be of benefit to our economy in the future? So very much unsettled questions around the world and including in the Asia region. So I just want to take a few minutes to review what the status is in some key jurisdictions. And again, this is just a high-level overview, but I think the theme out of this is you'll see it's inconsistent across jurisdictions. And to us, inconsistency in the laws present, exposure risk, especially if your business crosses borders or your counterparty's business crosses borders. So this is just to show you, sort of a high-level understanding of where things are now. And so you can see we've put together this sort of sliding scale of where things are. And we've kind of said, okay, on one end, there is the ban or more restrictive laws and policies in place. And on the other end, there are places that are a little bit more welcoming. And the most extreme probably be a place like El Salvador, which already has recognized Bitcoin as legal currency there. Now, again, just as a caveat, different places take different approaches in terms of whether they see it as a security, commodity, payment, et cetera. So this is just sort of a broad perspective on how welcoming or not welcoming places may be. So just to start, we'll start over on the ban side. And being in Asia, China gets a lot of the headlines. And China, even going back to 2017, had already banned trading of Bitcoin through ICOs back then. But really this year it picked up its ban on different types of crypto-related services. In September 21 this year, the People's Bank of China announced that all crypto-related activities were illegal. And those were things like offering trading of digital assets, matching orders, issuing tokens and derivatives, and also some regional governments started cracking down on Bitcoin mining in China. All that being said, by all accounts, it appears that holding Bitcoin there remains legal, but the fact that a lot of the transactions and the facilitations of transferring assets is illegal makes it difficult to transact appropriately in Bitcoin there. Of course, China is pushing forward with its central bank digital currency as one of the leaders globally in that space. So that's China over on this side. A couple other countries in Asia are also tending towards the banned side of this spectrum. Nepal, the Nepal Rashtra Bank said it was illegal to trade Bitcoin and other cryptocurrencies. And there's already been reports of police arresting people running, alleged Bitcoin exchanges there. So they take a pretty restrictive view on cryptocurrencies. Bangladesh as well, back in 2017, the central bank there announced that it doesn't allow or support any holding or trading of cryptocurrency. And this year it again confirmed that cryptocurrency trading is not allowed. There is, however, a little bit of potential inconsistency because I saw a report that this year the central bank also told the Criminal Investigation Division of the police that trading of crypto wasn't considered a crime. So I think they're still settling on exactly where the line is going to be in Bangladesh. Moving a little bit to the right, India and Pakistan are actually kind of in a similar sort of development stage right now in terms of what they want to do with crypto. So India in 2018, the Reserve Bank of India effectively banned crypto transactions, but that was struck down by the Supreme Court in March 2020. Then just last month, 2021, at the start of the new legislative session, there was an announcement that a new bill regarding regulating cryptocurrencies was being introduced. Now, I don't think the actual language of that bill has been released, but it seems like from the commentaries I've seen that people expect private cryptocurrencies in that sense to be banned. I guess that might imply that they're maybe trying to carve out a space for a central bank digital currency. But I think most people think it'll be on the more stricter side in terms of crypto transactions in India. Pakistan as well back in 2018. State Bank there banned crypto transactions. That too was challenged in the court system, with one of the high courts saying just this past October that there needed to be a committee, and indeed it approved a committee, to explore whether crypto should be allowed, and if so, how to regulate it. And I believe that report is due next year. So both India and Pakistan are about to announce where they're going in terms of crypto policymaking. So that's somewhere around here, I would say, subject to what the language of those reports are going to be. Also here, a couple of Southeast Asian jurisdictions, Thailand, Vietnam. Thailand banned Bitcoin back in 2013, and then went through a few years where it softened its stance. It even licensed some crypto service providers and exchanges. It required AML as part of that. But then this year it's banned NFTs, which are non-fungible tokens, utility tokens, and types of social tokens. So it's also trying to calibrate where it wants to be. Vietnam banned crypto as a means of legal payment, and they've banned certain types of mining activities. And yet, as I said at the beginning, Vietnam is one of the fastest growing crypto adoption jurisdictions in the world. So it seems like there may be a disconnect between what the policy is, but also whether it's being enforced. Somewhere in the middle, a couple Asian jurisdictions. Indonesia, 2018, Ministry of Trade legalized trading crypto as a commodity, but it was banned as a means payment. So that shows you the way the Indonesian government sees crypto. And then here in Hong Kong, where Vasu and I sit, Hong Kong is a separate jurisdiction from mainland China in terms of laws. And the legislature here in this session is also introducing a bill that is designed to regulate the crypto exchange space, requiring a license for all crypto exchanges here. The investments that those exchanges can service are limited to professional investors. So it's an open question what that means for individual retail investors. And one exchange already has a license. There's another exchange here that has one pending, which is to say that Hong Kong, it's also trying to figure out where it wants to be. It's clearly right now more welcoming than mainland China, but it's trying to assess what its regulatory regime exactly will be. And there's a bill coming to address that. Now moving more towards what we would consider the more welcoming universe. Malaysia, the Securities Commission there has issued guidelines on viewing digital tokens as securities. And that also requires registration and AML compliance. South Korea at one point a couple of years ago had at least reportedly considered a ban. There was a public outcry against that. So South Korea has focused its attention on taxing cryptocurrency transactions. And there was a bill that had passed with new tax rules that was supposed to go into effect this coming January 2022. It just recently got pushed to January 2023. Philippines as well, central bank there has required what they would say virtual asset providers to get licensed and registered and follow AML guidelines. Japan, one of the earlier regulatory regimes for crypto, partially probably because there was an infamous hack in 2014 of a Japan-based crypto exchange. They allow for crypto as payments, not legal currency per se, but they allow it for payments. But they too are seeking to implement new regulations by next year under the Financial Services Agency. But generally, right now, it seems to be in the more welcoming space. And then lastly, Singapore, which is in the region considered probably the leader or seen as the biggest proponent of this technology. It wants to be an incubator for this type of innovation. So the Monetary Authority of Singapore there has applied regulations to crypto payments and services. They have a licensing regime. They've also grandfathered over 100 crypto-related companies and exchanges into the system, but they are pretty strict on AML and KYC and things like that. So it is a strict regulatory regime, but they're overall welcoming in terms of having a legal system in place that helps push forward this technology. And then just two countries in APAC, but not in Asia proper. Australia last week announced that it also wants to be an incubator. No specifics yet, but it's pushing ahead with its plans to be a welcoming jurisdiction, or that's the way it seems. And then finally, the United States, which a lot of different jurisdictions look to see what they're going to do. and the US is still trying to decide what it's going to do. The complication of the United States is at the federal national level, there are several different government agencies and regulators that have a piece or a potential piece of this industry. There's the securities regulator that Vasu used to work at. There's the commodities regulator. There's the Department of the Treasury, which also controls sanctions. There's the tax authority. There's also state, of the 50 individual states, state attorneys general that are looking into crypto, and they may have different rules from one another. So it's a little bit unsettled. Like other jurisdictions, they are focusing now on getting laws in place. In August 2021, the securities regulator chairman, Chairman Gensler, said that this was going to be a focus area. He did sort of describe the crypto industry as, quote, a highly speculative asset rife with fraud. So you can see he's potentially coming at this from a more cynical angle than crypto proponents would like. But at least they're trying to put things in place to give some certainty to the situation. In September, the Treasury Department stressed the importance of putting in a framework for stable coins. In October, the United States Department of Justice announced the creation of a national cryptocurrency enforcement team focused on complex investigations and prosecutions in the cryptocurrency space. And then in late November, the US Federal Reserve and also the controller of the currency announced an intent to clarify what role traditional banks can play in the crypto space. And then just last week, several leading crypto companies had their CEOs and others in front of the US Congress trying to push ahead a more favorable legal regime. So the US is trying to settle its laws, and up until now, it's mostly set its, I guess, regulatory standards, if you like, through enforcement actions in the US. And from there, let me turn it over to Vasu, who can talk a little bit more about that space.
Hi, good afternoon, everybody, or good morning, depending on where we are in the world, or good evening. Thanks, Calvin. Thank you, Fintelekt. Thank you, APB, for the invitation. And thank you all for joining us. As Calvin pointed out, there's clearly a vast range of operability, if you will, across the world for crypto assets, and obviously as NFTs. There's a whole new arena of options to trade digitally nowadays. And the one thing that we're seeing globally as we're dealing with the implementation of rules and laws is enforcement through regulation. So there's already existing laws on the books which regulators are bringing to bear on the crypto industry across the world, really. And as all of you know, in the financial services industry, whenever there is a US dollar transaction, we end up in a world where US regulators want to get involved. And the unique thing about crypto, despite, I think what the stated goal is to be free from regulation, operate outside of that world. At the end of the day, there's always has to be an entry point into the fiat currency. And a lot of times what we're seeing is that is in US dollars. And because of that, right now what we're seeing is the US regulator, as Calvin said, being the most active. That may be the US Securities and Exchange Commission, the US CFTC, the US Department of Justice, FinCEN, which is part of the Department of Treasury. And it's literally an alphabet soup of regulators across the United States that are bringing cases. And as Calvin said, there is some desire in the crypto industry for there to be more regulation so that there will be less enforcement. But I think we're still some time away. And what we thought would be helpful to cover next is, now that we've laid out the lay of the land, if you will, in terms of what's happening with crypto itself, also talk about how enforcement agencies are dealing with the lack of regulation the way it stands now. And what we're seeing is, as you'll see on this slide, a host of different cases that prosecutors are bringing. And some of these most of them are not unique to cryptocurrency. As you'll see, anyone who's been in this industry, in the financial service industry, will recognize all these different types of actions: money laundering, sanctions, failure to register, failure to obtain a license, failure to conduct KYC, failure to conduct AML, tax and reporting obligations, and failure to comply with those. These are all the cases that we are seeing now, and these are the risks that you need to be alive to right now. I think there was a question on the on our board talking about where is crypto legal, and I think that's a loaded question, because not all crypto is created equal. Not all crypto has the right protections, or offerings have the right protections. And so the point of this discussion that I'm about to have with you is to show to you how you can't just think about it whether crypto is legal or illegal. You need to think about it a lot broader, especially for those of us who are in the financial services industry. So that being said, let me walk you through a couple of cases that are kind of at the forefront of this evolving world that it behooves you to know and be aware of, so that you can kind of in your own mind create a chronology or a timeline of how things are progressing. So the first case I want to talk about is a criminal anti-money laundering case that the US Department of Justice is prosecuting against a exchange. And the exchange is called BitMEX, and they are based in Hong Kong, and they're incorporated in Seychelles. One thing I'm going to be doing is talking a lot about the countries of origins and registration and where the people are from. And that's designed specifically to show you that even though it's a US prosecutors, they are bringing cases that cover the regions that all of us are currently sitting in. So BitMEX was Hong Kong operated, Seychelles listed, and the founders, they offered exchange services to American residents, which exposed them to American laws. And essentially what the DOJ has done is that it's charged the founders and another individual, the business development head, for evading AML rules and conspiracy to commit violations of the Bank Secrecy Act. And just by way of background, one of the co-founders is an American who resided in Hong Kong and was working in Singapore. Another was a British permanent resident living in Hong Kong with the UK and Grenada passport. And another one was living in Bermuda, and he was an Australian citizen. And they all now are in the United States facing charges of violating the US laws. And that case is ongoing. It's scheduled to go to trial in March. And it will be very telling to see how that case plays out, because and it'll have serious implications for all of those who are operating cryptocurrency exchanges and have US customers. Another case, another topic that prosecutors have brought cases relates to the stablecoins as well, and misstatements that offerers have made to folks who sit in the United States. And Tether, as you all know, is a stablecoin, and they are incorporated in Hong Kong and have and operate through a holding company in the British Virgin Islands. And they are under investigation by the United States Department of Justice for alleged fraudulent misstatements relating to their transactions and whether they are backed by US dollars. And earlier in 2021, Tether settled with the New York Attorney General. And this is where Calvin was talking about, not only do you have to deal with the regulators, national regulators, in the United States, you also have local regulators, and especially in New York, where it's such a financial center, you end up with the New York AG, and they extracted a $18.5 million fine from Tether for making false statements about whether its stablecoin was backed by US dollars. And just by way of background, Tether is has a director and CFO who is a French-based Italian, and another director and CEO is a Hong Kong-based Dutch director. So again, people from around the world getting started in these enforcement nets. And then for BitMEX, again, there is a charge by the Department of Justice for failing to have adequate AML procedures and failing to register with the CFTC, because BitMEX is a unique exchange because they were only trading in derivatives. So they were, the CFTC argued that they failed to register with the CFTC, that's the US Commodity Futures Trading Commission, when they were offering futures to American residents. And then, kind of dealing with the crypto, kind of very specific to the crypto world, so not AML, not misstatements, but dealing with the crypto world, is an allegation by US regulators that these tokens or these offerings are actually securities and need to be registered with the SEC. That's happened a few times. Right now, the SEC is in litigation with Ripple Labs for its XRP token. And the SEC claims that Ripple sold $1.3 billion worth of tokens, XRP tokens, that it should have registered with the SEC. And it's brought a claim as failing to register securities. In addition, Hong Kong-based Block One, which is a Cayman registered company, operations in Hong Kong, settled with the SEC in 2019 for failing to register its initial coin offering, EOS, and paid a $24 million fine. Similarly, earlier this year, Blockchain Credit Partners, which is a Cayman company, which offers digital tokens, agreed to pay $12 million to the SEC, and Polynix agreed to pay $10 million for having an unregistered exchange. And that's just for the US regulators, right? So that's a whole host of cases. And there's also cases that the Office of Foreign Asset Control, which is part of Treasury, is bringing against, is thinking about issuing, it recently issued an advisory about sanctions risks for facilitating ransomware payments using crypto. And I'm sure all of you have heard of certain cases where there'll be a hack of a corporation's emails or servers, and they'll ask for cryptocurrency in order to release that information. And Calvin, in a second, is going to talk to you about tracing cryptocurrency. But what OFAC has done is it's making it it has a strict liability, it's going to have a strict liability standard and requiring organizations that are going to allow folks to make ransomware payments, ensure that they have appropriate policies and procedures in place to prevent that from happening. And so that's something that I think will be, and also designate those companies as adding them to the sanctions list. And that's actually happened to the Suez Exchange, which is a Russian-based Czech-registered exchange that OFAC added to the sanctions list for permitting ransomware payments to be made through its exchange. So that's another area that regulators are really focused on. And then you have regional regulators. So you'll have recently, as Calvin pointed out, the Malaysian regulator initiated enforcement actions against Binance for operating an illegal exchange. And Binance was ordered by the Malaysians to immediately shut down its website, stop marketing in Malaysia, and restrict any Malaysian customers from trading on its exchange. One thing that's interesting is that we haven't seen, and I don't think we will see, individuals being prosecuted for holding cryptocurrency or engaging in apparently legal, non-financial money laundering related crypto transactions. So we haven't seen that. This is obviously a discussion we're having with banks, and it's more on the side of the offerers, the exchanges, the financial services industry. It's more the facilitators that the regulators are focusing on. Also for Binance, Thailand filed a criminal complaint against them for operating without a license recently, and the UK Financial Conduct Authority banned Binance from operating in Great Britain. And as a result, and this is shows you how quickly things are changing, just this week, earlier this week, Binance withdrew its Singapore applications for license to trade and to offer securities and or offer exchange services in Singapore, and it's closing all its availability in Singapore. So it's an evolving world, and it's very important for all of you to understand that it's evolving and that the answer that you might think is right today may change by tomorrow. But the one thing you should be confident in is the fact that some of these traditional tools that regulators have used for years, that you've learned in the financial services industry and your banking industries, will be used against this new financial offering, if you will, this new currency. And you can expect that regulators will expect your compliance, your processes and procedures to take into account the new risks that these offerings bring to light. And with that, I'll pass it back to you, Calvin, to talk about how easy or hard it is for those ransomware folks that use cryptocurrency to get nabbed.
Yeah, thanks, Vasu. I do want to discuss that, but before I jump right into it, I think now's a good time, maybe, Arpita, to put up the first poll just to see what people think. So maybe just take 30 seconds. What's your initial instinct on this true or false question? Users of cryptocurrency are anonymous, making it very difficult to track and recover stolen digital assets. Just give folks a few seconds to enter their thoughts, please. But then, yes, I'll progress with explaining some tools and techniques that we've used in some cases, that governments use in these cases, and hopefully that'll give you a better understanding of how this world operates in that sense. So maybe just 5 more seconds, and then if we could close the poll, please, and see what the results are. Okay, yeah, about 72% say true, which is not surprising to me. I have asked this question before, and that it's often a similar percentage, and 28% say false. So I was a little bit cheeky with the wording I used in the question, saying very difficult to track and trace. But the answer is it's possible to track and trace and recover cryptocurrency. And that's important to emphasize, because when people first get introduced or first hear about the cryptocurrency space or hear about Bitcoin, myself included, the assumption often is that this is a completely anonymous world. It operates in the shadows. No one knows who's doing what. And therefore, if things get stolen in that world, it's basically gone. It's in a black hole, and you can't do anything about it. That is not true. That's a myth. And so it's a couple of minutes on a little bit of background about how crypto transactions work and how you see them in public. So this slide, this little box on the right is actually an excerpt I pulled just from, I think it was from blockchain.com, of the very first Bitcoin address. Okay, so 2 important things to understand about transacting in cryptocurrencies. There's 2 important codes that are used. The first is called a public key, which is an alphanumeric code, like the one you see here, 1A, 1Z, P1, etc. And this acts kind of like a bank account number. This is a public address that you can provide to the world if you want to transact in cryptocurrency. If you want someone to send crypto to you, you can give them that address, and that's where they would send it. The second code is a private key, which operates kind of like a password or a PIN, if you like. And so that's something you want to keep private, because whoever has access to that private key ultimately has access to the crypto in the wallet and can therefore transact in it. Okay. Now, in public, as some of you may know, that the very essence of blockchain technology is that every single transaction is on this public ledger, which cannot be erased, right? And so anyone can look up these addresses, these alphanumeric addresses, and see what transactions have transpired with that address. So here, from this to this address, 1A, 1Z, okay? So that's public. Everyone can go up online and see that. And the transaction, therefore, I would say is not anonymous, it's pseudonymous, right? So everyone can see that this address transacted in this cryptocurrency. The question then, especially if you're trying to recover assets or you're the government going after a bad actor, is who's behind this address and what can you do to try to figure that out? Okay. Here's an example of what you can do next, okay? If you have those addresses, right? Then if it's a simple transaction, just going back one slide, if it's a simple transaction, just A to B, you can go online, see it, and that's very easy to see and understand. But more realistically, transactions are more complex. They involve multiple transactions, potentially multiple different types of cryptocurrency, and then they get split up into smaller pieces and get sent on to other places. So for a human to just look at the public database, the public spreadsheet, if you will, of all these transactions, it would be very, 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 very difficult, basically impossible for a single person to trace all the transactions of anything that's complex. So what you need to do is work with, frankly, professionals that have access to sophisticated top-of-line software that basically has a computer crunch all this information, basically instantaneously and spit it out back to you. And then you have to have the person that's be able to break it down and understand what's happening. So this is an excerpt from the software that we use at our firm, which is actually the same software that the US Department of Justice uses. It's actually a dynamic software. This is just a still screenshot, but it's basically one of the outputs after we've analyzed the information. And so here, we worked for unfortunately for a victim of a cryptocurrency fraud, all right? And so this was his account at an exchange. And these blue lines represent the money that he was induced to provide to different addresses that the fraudsters had. So the system will tell you exactly what time and when those cryptocurrencies were sent out. This black box I've covered up for personal reasons, but it tells you how much was sent out, okay? And then it goes to the addresses that the fraudster said, hey, send it to me at this following address, 1AB23C. Okay, and I've blacked these out as well, but each of these bars represent another cryptocurrency address. And so after studying it, we can, in the system, when you have the software, if you hover over these wallets, you can see immediately all the inflows and outflows of cryptocurrency into that wallet. Imagine being able to see that in anyone's bank account, every single dollar going in and every single dollar going out, when it went in, when it went out. Okay, so that's what this does. And then when we crunched the information and assessed it, we produced this chart. And what you can see here is that the fraudsters took the money, then tried to break it up into smaller pieces and send it to all different other wallets, okay? And so if you were following just the trail one by one, it'd be pretty hard to see what was happening. But when you see it here, you can see ultimately, despite their best efforts to spread it out, it all ended up in the same 6 wallets, which we would argue is a strong indication that these fraudsters control these wallets because that's where they're sending all the money back to, right? So this becomes a powerful tool to be able to track and trace where the crypto is at any given moment. And, the example I often compare this with is, in my asset recovery practice outside of crypto, if I'm trying to track and trace where stolen, regular traditional fiat currency has been, to have to go to a court, explain the situation, make my case, get a court order, serve it on a bank that I believe the money has gone through. The bank reviews that information. Maybe in 3 or 4 weeks, they will send me a bank statement. Then I review that bank statement, see the inflows and outflows, and then repeat the process with the next bank, always feeling like I'm 1 or 2 months at best behind on where the stolen money is. In crypto, it's immediate. Right? The system will track it, to the minute of where anything is at any given time. Now, let me pause here. I started off by trying to dispel the myth that this is a completely shadowy world and you can't find any information. That's not true. I don't want to give the impression here in explaining this that it's completely clear and you can always track and trace and recover super easy. Also not true, because just as in the non-crypto world, there will be actors who use different methods, sometimes for legitimate reasons and sometimes for illegitimate reasons, to basically cover up or be more opaque about their transactions. So in the crypto world, there are different things like decentralized finance protocols where you don't go through a central exchange. Or there are things that are called like mixers that mix up, which cryptocurrency is in there, and it makes it hard to tell whose cryptocurrency is whose. And then of course, there's also the dark web, which maybe some of you folks have heard about, where things are shadowy. But that's just like in the real, sorry, I shouldn't say real, the non-digital world, where people have shell companies and they have opaque beneficial owner structures, and they use different techniques as well. So the answer is always somewhere in between, but there's things that you can do. So just to close this out, so now we've traced and tracked where the crypto is. We know the wallets that we're most interested about. We know the addresses that we're most interested about. What can we do next? And this is where it helps for those, for victims of fraud or for creditors trying to enforce against cryptocurrency. It helps that a lot of these crypto exchanges are going mainstream, because that means they're having to adopt anti-money laundering best practices, which inevitably includes know your client. And so they often will have information about the account holders, those that, alphanumeric 1A, 2B, 3C, they'll have information about who the real person is behind those addresses. Okay, and so just as in the non-digital world, we could go to the court and get an order to tell that exchange, or tell that bank or tell that third party to give disclosure information, so too we can do this here with crypto exchanges. Now, again, you may ask, well, wouldn't criminals just use the ones that aren't doing KYC? Yes, maybe. But what we've seen in a lot of frauds is that they also want to use the big mainstream exchanges, because that's the easiest way for them to transact as well. And maybe it gives a veneer of legitimacy to them if they say that we're using some licensed exchange. So again, it depends on the facts and circumstances, but you'd be surprised potentially about how much information is potentially available there because of KYC. And so, I mentioned having to go to court. Certainly in common law jurisdictions, we're seeing the trend towards these courts recognizing traditional tools that were used for seizing property, for freezing property, being applied to the digital asset space, recognizing that Bitcoin and other cryptocurrencies are property that you can freeze and seize. And then in civil law jurisdictions, we're also seeing the ability to work with local authorities who have that similar powers to apply traditional tools and traditional legal concepts towards asset recovery. So just wanted to again underscore, it's possible to retrace and recover. Sometimes it's even easier than the non-digital world. Sometimes it's harder, but just know that this is a tool that's out there. With that, let me switch it back over to Vasu for the going forward.
Thanks, Calvin. That was really helpful to hear. And yeah, so what's next? Where do things go from here, taking into account the regulatory landscape that we talked about, the enforcement landscape that we talked about, and the importance of traceability for both criminal violations and asset tracing for theft and recovery? And so what we're expecting to see is, a few key jurisdictions finalizing their laws and rules in the next year or two. Key jurisdictions being US, India, China, which have a supersized impact based on the capital available in those jurisdictions and just the pure number of people that those jurisdictions have. And as we've seen already, we expect the approaches across Asia and the world to be different, ranging from outright prohibitions to embracing the technology's possibilities and all sorts of regulation in between. I know one of the questions was, what are some of the factors that are applied about whether a cryptocurrency should be allowed? And we can have a whole discussion about that today. That can be a whole nother presentation. But I think really a lot of it deals with this fear and concern of traceability and operating outside of the traditional financial systems. And I think the argument to that will be is that evolution needs to occur with financial services and there need to be more opportunities for people. So that's a debate that will go on for some time, but we think, based on the fact that we have some 300 participants and all of us on this call, that some version of this crypto world is going to remain intact for the long term. And as technology advances, we're going to continue to see refinement in the laws, and as we did with traditional banking, and also prosecutions and enforcement will increase. As Calvin pointed out, Gensler from the U.S. SEC has taken a very aggressive stand. So is the U.S. DOJ, and as you've seen with Malaysia, Thailand, that the regulators are definitely staying on top of this, and we can expect more prosecutions. And courts will continue to set precedents and forced to adapt to handling disputes that are in this space. And as we all know, no matter what we do, fraudsters and folks that want to violate the law will find a way to do it. All of you who are in compliance know that there is absolutely no way to stop everything. I think the best we can do is all be aware of the risks and react as quickly as we can when we see something happen. And as you'll see in the next slide, Calvin, can you go ahead and move to the next slide? Thank you. What can you do now? I think it's, as you've done today, it was a very high level discussion about crypto today, but gain a basic understanding of what it is, how it's used in your industry, and what the key terminology is. Determine how your company is or may soon interface with these various digital assets, and stay up to date with the latest laws and regulations. And as I said earlier, that is constantly changing, and work with professionals who can assist you with these novel developments and evolving best practices. And as Calvin and I shared with you today, some of the tools, make sure you're familiar with those tools that exist in the industry, and know who to call for help in terms of who your compliance counsel is, when things go wrong, your regulatory or tracing counsel will be. Back to you, Calvin.
I think we're at the end of time. So thank you so much, Vasu and Calvin, for that very, very insightful presentation and for answering so many of the questions. And many thanks to all the participants for attending and making this such a lively and interactive webinar. Let me also take this opportunity to wish everyone season's greetings and a very happy 2022 in advance. And we hope to see you soon enough in the next year. So that's it from here, from the Fintelekt team. It's bye-bye.